Hi everyone, and welcome back to 7-Minute Options. In this video, I want to take a quick look at a position I've had open since the end of February. Right now it's May 24th, so it's been a few months. And I just want to take you through this trade and exactly how it has evolved. I've done okay on it so far, and let's see what options I have going forward. So if you look at the chain here, back on February 27th, right, I opened a position here in ChargePoint. I sold a $25 put. This line represents that day here on the 27th, and at the time the stock was trading right around $30. And I figured, okay, look, this stock has been selling steadily. I thought, okay, maybe it's nearing the bottom. The RSI had just crossed the 25-point threshold on the bottom there, so I thought, okay, you know what? Let's maybe sell a put, an out-of-the-money put, in the hope that it turns around. And so I did. I sold a $25 put, which is what you see here. And the stock continued to move against me. Strong sell-off for 4 straight more days after I sold it. And it looks like it kind of bottomed out here on March 4th. And at that point, I was in a losing position on this on this option. And so what I did is I rolled it, right? Because I like to sell options that are maybe typically 40 days out, give or take. And so this one, here on March 4th, I thought, okay, you know what? If this keeps going, I'm going to need more time. The other thing was I noticed that the IV was very high at the time, right? It had a strong sell-off. IV tends to spike when the underlying is being sold steadily. So as the price dropped, the IV spiked, and I sold it, and I got good money for it. So I got $152 when I opened the position in February. And you can see here, roughly 5 days later on March 4th, when we were down here, IV was very high. I was able to roll it by 1 month. So I went from the March expiration to the April expiration, and I got $272 for rolling that one. And so the stock started moving in my favor, which was fantastic news. And then something happened, and again, it started moving against me. And it bottomed out to an even lower spot. And so down here, I was again like 20 days away from the April expiration at that point. You can see this is the end of March. The expiration was April 16th. So this date here, you can see it bottoming out here on March 25th, 26th. I'm like, well, I'm 20 days away from expiration. I'm in the money. So, sorry, I'm out of the money. Let's roll it. So I rolled it for $113 and kicked it into the May expiration. And the expiration there was the 21st of May. And you can see here, it once again went way up high. So I was doing great, and then it sold off again. And so here, the last roll I did was on May 3rd, which is again, at this point was 18 days prior to the May 21st expiration. So where were we on May 3rd? Right about there. You can see I was already, again, under the strike there, under the $25 put. And so I sold it again. I collected another $111. And so now my expiration is June 18th, right? So I'm out here in the expiration trying to see how this is going to go. One thing I'm trying to keep an eye on is I have earnings coming up on June 3rd. And interestingly enough, there doesn't seem to be much of a drop in volatility in future months. So for many underlyings, the volatility is very high just before earnings, and then the volatility of each expiration starts to drop the farther it is beyond earnings, right? And that's because there's some uncertainty around earnings and which way the stock is going to move in the few days following earnings, but there's not that much concern about what happens, say, 4, 5, 6 months down the line because of that one earnings announcement. And so I'm not seeing that drop here, which means I probably don't have an incentive to hold it past earnings. I'm not expecting a drop in volatility post earnings. So I'm going to look to get out of this trade in the next few days. If it starts moving up a little bit next couple of days, if it moves up, maybe volatility drops a little bit further, but it's already quite low. And so I think right now it's a good time to exit. So tomorrow I'll be exiting this trade after market opens. But yeah, just check out this trade. So how I've done so far, bringing it back again, I've collected 152 when I opened it, 272 when I rolled it, another 113 when I rolled it a second time, and 111 again when I rolled it the fourth time. I have collected $648 total in premium. Today I could buy it back for $294, and I would keep the $354 difference that I've piled up. over the past 4 months or so. So that's fantastic. So if you want to look at it in terms of our return, right now it's costing me about $1,350 of buying power to maintain this position. So a $300 return on $1,350 in roughly 4 months is a fantastic return. This gets back to my earlier episode about like my personal target being 20% a year. This is well above that, so I've done very well in this position. I'm very happy about it. Then the other thing to consider about buying power is it is dynamic. So as this stock, say, sells off in the next 3-4 days, that buying power could easily jump up to say $1,600 or maybe even $2,000. So right now it's $1,350, but that is dynamic. And the opposite is true as well, right? As the stock rises, the buying power will drop. That's because this is not a defined risk trade. It is undefined, which means it's a naked put or a cash secured put, and my losses here could be as much as, say, $2,500 if the stock were to go to zero tomorrow, which it's not likely that it would do that, but in theory, I would sustain losses all the way down to zero if that were to happen. So there you go. That's my plan on ChargePoint. Plan to get out of it in the next day or two, hoping for a slight bounce back so I can collect an extra 5 or 10 instead of it being the other way. But overall, this was a very successful trade. I enjoyed holding this for the last 4 months. And that's 7 minutes. Thanks very much.